Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. So, starting off the week, this is the first week of September. Major number coming out on Thursday and Friday, the non-farm payroll, first week of the month. A pivotal week because this really sets the tone for the balance of autumn, of fall. And the market should be picking up after yesterday's closed market in the U.S. So we're looking at a couple of numbers coming out today. GBP number, construction number coming out this morning, and later today we have at 4 o'clock we have a USD manufacturing number that's coming out at 4 p.m. So things should actually look like they're should start really picking up, and we should see much things are really moving. So starting out with the Euro USD, really dead on its waters on the bottom, as you can see here. There's not much to say. It's not really bouncing. It continues to trickle down, and this is a hard trade because you think it's found its base at about here, and then all of a sudden it continues to trickle down, and it's not tanking. It's not one of these obscene moves. It's just small little trickling. So in some respect, if you're holding it over a few days, you could really be doing well. As it seems at this point, it looks like it's going to bounce because it's hitting a previous support on a daily chart. 131.20, let's say, is a decent support. Let's see if it does hold this. Maybe it could regain some of this 32 level, maybe up to 32 and a half, just to to breathe some life into this, because it's really been 700 pips in a month and a half or 2 months is quite a move for such a currency. Looking at the Japanese yen, there were some major news coming out of Japan this morning, and as a result really making it a little bit harder for it to really gain some momentum. And look at here, we're coming closer to the 105 level on the USD Japanese yen. So looking at an 8-hour chart, you see this big rally this morning, big sell-off on the Japanese yen. Looking at the daily, we're getting closer to this 105 level. Okay, so we could really look to see if we can retest this level and even break higher. On a weekly chart, this is how far we haven't been in this area. We haven't been in this area since even before 2008. Let's look at a longer time frame even. So this is just gives you a perspective of where we were and how far we've come and how far we can continue going. Growing up, I remember the yen 20 years ago being at 120 on a consistent between 120 to 130, maybe even 40 level. So yeah, in the 95s. Okay, it just gives you a little bit of information about how old I am. But in any event, you're seeing the yen really decline quite harshly. It makes things much easier for the Japanese economy to export things as a result. So it is a double-edged sword for the Japanese manufacturers, but a weaker yen ultimately helps them with their economy because they're able to sell more of their goods internationally. So looking at the yen at 104, let's see if it tests this 105 level again and breaks even higher. If it does, then we see some resistance of 108, 112, 115, and 120. So a longer time frame, obviously, but something to consider. Looking at the GBP Japanese yen as well, big rally this morning, 126 pips. This is just 126 pips. So I would really keep an eye on this to see if there are some retracements to jump in. As you can see here, also big trading range for this currency pair for a very long time, since December. So let's see if we can break it and even break higher than the 175 level. Okay, so that covers the Euro USD, the USD Japanese yen, and the GBP Japanese yen. Looking at the gold, gold has been trading quite decently recently, trading between a range, but if you're able to take the top and the bottom of the range, like I said before, you could really maximize on just buying the bottom of the range and shorting the top of the range. It's not trending, okay? It's not going from 1200 to 1300, but it is trading in a range. So like I said, you could take pockets of opportunity just to scalp a few dollars within these ranges. Looking at the Dow Jones, we left off close to dead on our highs. This is actually includes sell-off after the market opens. Let's see how the market opens today. It will give us an indication of where the market wants to go for the rest of the last quarter of the year. So it is a pivotal quarter because it really brings us to the end of the year. Historically, September, October are sell-off months. November we end up consolidating, and from November to December is usually very bullish month. This is just historically. What will pan out, we'll have to see. Okay, but as you can see on a weekly chart, we're on dead highs. Okay, all-time highs, and we were testing it just going into the last session just last week. Looking at oil, oil's been trading. It has been bouncing a little bit, filling in this gap, closing this gap, and then finding a little bit of a threshold here, and then now bouncing to this 95, 96 level. Big sell-off from the summer of 104, which are major sell-offs. Usually during this time, the U.S. is one of the largest users of oil, and as a result, during this time there's a lot of hurricanes in the Gulf of Mexico, which disrupts the supply of oil to the U.S. So as a result, historically, okay, this is not graved in stone obviously, but historically it does mean that oil does usually have a history of trading quite volatile, with volatility during this time of the year. So it is definitely worth it to keep an eye on it and keep it on your watcher and have the graph up. And just looking at the last thing, and certainly not least, looking at the ZAR, bouncing again to 1070. This is indirectly related to Russia. Russia has a couple of companies that own some mining fields in South Africa, and as a result, as sanctions are going on Russia, some of these companies are being heavily influenced by it, and secondly, influencing the ZAR. So if we're seeing the ZAR now pop up to 1070 from 1068, 1060, which we've been hovering for quite a while, it could be related to that. Again, it is also a trade that you can just trade the range. It hasn't been trending for a while. Okay, as you can see here, we sold off last year from 1120 to about 1035, and then we bounced off this previous support level. Okay, resistance level, now support. Now we're just in the middle of the range of that. So let's see if we could break up above 1080. Okay, that would be a significant level, and we can take it from there. This is Fred Razak at CM Trading. I want to wish you guys a great trading day.